Hi, well, it's Susie again from Esoteric Trading Solutions. I hope you're all well. Hope you're living the life you want to, being kind to yourself, being kind to others, being kind to your family and friends, and most of all, being kind to your animals. Just thought I'd go through how to set up an investment portfolio. I did this for some clients. It's in a series of 4 videos, and went into great detail about how to set up a 2-year portfolio, looking at generally what professionals look at, and this video here is just sort of the bare bones of it, but I think it's important, particularly when you do look to invest in assets, and just what you should look at generally as a rule. And as I said, this is the bare bones of it, so it shouldn't take that long. When you set up a crypto portfolio, the main thing is obviously you're starting with the investment process, and the first thing you should be looking at what are your goals and objectives, and determine your own investment can't say that word, sorry. It's late at night and I've just come back from work. Parameters. And the first thing, I mean, look, this is not exhausted. There's a lot more to consider, but this is just, as I said, the bare bones. First of all, your cash flow needs. Do you need the money? How long are you going to invest for? If you say you've got a time frame of 2 years, will you fully invest and not with margin? Again, you know, what's your risk tolerance? If you do invest in crypto, can you handle the risk of cryptocurrency, given that cryptocurrency out of the 5 asset classes is the most obviously risky of all the asset classes put together? And if we talk about the asset classes, we're obviously talking about cash, fixed income, bonds, equity markets, property markets, and the 5th asset class being cryptocurrency. There's subsets of those asset classes, which are obviously, you know, foreign exchange, but also commodities as well. So is the cryptocurrency market the right asset class for you? Generally, when we do talk about portfolios, we talk about allocating a percentage across all the different asset classes. But if you're looking particularly at a cryptocurrency portfolio, you're taking on the highest risk of all the asset classes, and obviously the volatility. And also within the cryptocurrency asset class, the sub-allocation of that asset class, most cryptocurrencies will move together with Bitcoin. Obviously going forward, that correlation, if you want to call it positive correlation, if Bitcoin goes up, they go up, or negative correlation, when Bitcoin goes down, most cryptocurrencies go down. As the market gets you know, more mature, you know, out of adulthood to teenage to more mature, you'll find that correlation will change quite a bit. Also, as new entrants come into that market, new clients and new players into the market, obviously the nature of the way the market trades as well, and you know, the nature of those correlations will change as well. So risk tolerance is one of the first things that people should look at. You know, can they handle the drawdowns in cryptocurrencies? Can they handle the market valuation of their cryptocurrency portfolio when they're losing, you know, a lot of money, say, for example, like a lot of us are at the moment? Also, what's your performance objectives? Say you're looking at a time horizon, you know, as a minimum 2 years. What performance objectives, you know, would you think that you should get in the cryptocurrency market? If you believe the cryptocurrency market's going to be down for 2 years, maybe this is not the market for you. Maybe you should be allocating to the other asset classes. Also, if you don't have the risk tolerance, and also it depends on your age. For example, if you're older, say 55 to 70 or whatever, you don't have you don't have as much time as, say, someone who's 25, who can take on a lot more risk in their portfolio and has more time for the assets, the riskier assets, to come back and to perform. So there's all different things that you need to look at in terms of determining your own investment parameters. Also, investment restrictions. What are your investment restrictions? And as I said, this is not an exhaustive list, but it just gives you an idea of what you should be considering when you look at the first thing in establishing goals and objectives. Basically, you might have an investment restriction, for example, you know, only looking at investing in cryptocurrency that has a 20 million minimum, you know, circulating issue, or a minimum, total issuance of, say, 50 billion or something. You may have an investment criteria. I'm only going to look at initial coin offerings or secondary coin offerings, coins that are actually trading secondary under $1, for example. You may have another investment criteria. Does the technology work? You may say, look, I don't want to invest in things that, are under Chinese legislation, or, notwithstanding the Chinese, don't allow ICOs anymore. But you get the general idea. You may say, look, I'm not looking to invest in anything that comes from Eastern Europe, for example, or anything where there's bad history or compliance or legal risk, that sort of thing, or where there's, chance of something going wrong more so than anywhere else. You may decide within this portfolio, I want different industries. So for example, in the cryptocurrency market, there's a lot of different sectors. There could be a medical sector, there could be the health sector, there could be the entertainment sector, there could be, the payment sector, the platform sector. That list goes on and on and on. And as time goes on, those sectors will become more and more important, and they will probably trade differently to other sectors. It'll just be like the equity market. For example, in the equity market, you have a lot of different sectors, and even if the Dow goes down, which is the 30 of the largest stocks in the Dow, other parts of the market may hold up quite well. For example, technology or healthcare might hold up better than, say, the banking sector. So as cryptocurrency gets older and more mature, these different sectors will perform better or worse, and they'll perform differently to each other sector, depending on the macro environment, depending on what interest rates are doing, depending on currency, depending on government policy and all that sort of thing. So at the moment, we do have certain sectors, they all tend to go together in positive or negative correlation. Positive correlation. So in other words, 1 for 1, or one, Bitcoin goes up and everything else might go up more or less than that. But as time goes on, the cryptocurrency market will probably act more like the equity market, where the stock selection process becomes really important. Okay, within this investment restriction, you might have, I can't invest, I'm not allowed to invest in any more than, say, 40% of my portfolio in, say, Bitcoin or Fund or Ethereum or Ethereum platforms, or I need to be on different blockchains, or I can't have my exposure to, say, all the Neo platform, for example. So even if you invest in individual coins, you might find that those coins and tokens are sitting on the Neo platform, or even on the Ethereum platform. So as you can appreciate, if something happens with the Ethereum platform, those coins are going to be at risk, potentially, to doing their own thing on the Ethereum platform. So there's a lot of different things to consider. You might say, like, in this portfolio, I'm only going to have 8% of my exposure to Ethereum platforms, or, a certain percentage to country risk, legal risk. The team experience is a minimum. Where does the team come from? All those sort of things. There's so many things that you can look at in terms of criteria of an investment portfolio as such, and these are just some of them. There are a lot more. This is just a very basic overview. So the second thing to setting up a cryptocurrency portfolio is asset allocation. Define your investment policy strategy. As I said, we do have 5 different asset classes, including the cryptocurrency asset class, which is the newest one. But, optimize, your risk-reward trade-off. Determine the asset allocation. Because we're only in cryptocurrency, we obviously have to determine the sub-asset allocation to cryptocurrency. Do we find that we invest in all the index assets that are made up, of the cryptocurrency index? Do we do a top-down investing approach or a bottom-up investing approach? Do we look at different asset classes, or do we look at different sector asset classes? Again, positive and negative correlation. What's more, positive to Bitcoin? What's, being less, correlated to Bitcoin? In other words, if Bitcoin goes down, by 5%, does another cryptocurrency particularly go down by the same amount or even more? There's different investment styles. So these are all the little things you have to keep in mind. If you look at the third thing in setting up a portfolio, again, selection. We start to implement the investment portfolio, the portfolio construction theme. What type of sectors, industry, legal jurisdiction, countries, teams, Where do we buy the cryptocurrency? What exchanges? Do we only stick to the big exchanges like Binance and Bitfinex? Because while we're executing or implementing the portfolio, the exchange could be hacked or gone down, and we could risk, losing our money. What are the custody issues? All the coins we buy, can we put them on our Ledger Nano S? Can we keep them safe, for example? When we decide what we're going to invest in, do we look at a macro, from an overall and say, right, the best sector for the next, 2 or 3 years, the best sector for growth, is it going to be health? Is it going to be settlements, getting your cash flow straight away? Is it going to be the entertainment industry? So once we decide the different sectors, we then look for the best of breed coin or token in that sector. Now, I can appreciate there's basically that we know about it. If we look at Coin Capital Market, there's roughly 1,630 coins and tokens. And, technically speaking, if you're a fund manager or an investment manager, you'd need to go through all those coins and categorize them into different sectors, and there can be overlap. And then you need to be fundamentally and technically technology aware of whether they work or whether they don't, whether they fit the criteria you're after, and pretty much find the best asset in that sector. So say, for example, I believe in terms of global payments, Ripple, the company and the tech, and XRP is the best in that sector. Then also what you need to look is relative value. If I invest in, say, food technology like Ambrosis, is that the cheapest and the best coin in that sector, for example? If I invest in another sector, say the entertainment sector, is Tron the best technology and the cheapest relative to other things in that sector? So there is so much that goes into setting up a proper cryptocurrency portfolio or any type of asset portfolio. If we look at number 4, I want to keep this sort of short and sweet because I think some of my videos are going too long. If we go to number 4, then we've got, once we've set up the investment portfolio with all our different assets and our different criteria, we might have tier 1, tier 2, and tier 3. Tier 1, for example, being Bitcoin, Ethereum, Ripple, XRP, I should say, and Litecoin, and even potentially EOS. We might have, say, tier 2, being Bitcoin Cash, Ethereum Classic, IOTA, and the list goes on. And tier 3, for example, the smaller, more spec coins, as I said before, like Neuromation, the key might be say, for example, Ambrosis, and so we've got different sectors, but obviously different types of tokens and coins. So obviously once we've set up that cryptocurrency portfolio, we need to measure performance. How are we going to measure performance? Are we going to run an absolute return fund, or are we going to measure our performance against the index in the market? Or are we going to measure it by some other type of index that gets published? And also, if we're going to measure our performance, do we measure it weekly, monthly, quarterly, etc.? Do we evaluate our performance relative return or absolute return? Do we look at it in terms of the overall index? Okay, if we use an index, what's the constituents of that index? In other words, what are the composition of that index? What's it actually made up of? How does it work? Do we manage the portfolio against the index? Do we manage it against the top 20 cryptocurrencies or the top 30? The professional portfolio managers manage their index. They use an index as top 30 of coin capital markets, and they tend to look at their returns against an index. Or we may decide we're going to do it against an absolute return index. Then the last component of this is effectively monitoring and rebalancing the portfolio. If we have portfolio weightings, and say, for example, we might have 40% of our portfolio in Bitcoin, and we mark to market our portfolio every day. In other words, we bought Bitcoin at 5,600 and all of a sudden it's 6,200. We have a profit there, and we're overweight compared to the index, so we've actually made money compared to the index, and Bitcoin keeps going up and everything else just stays the same, say. According to portfolio theory, we should be rebalancing back to the index. As the market goes higher in terms of Bitcoin, and we have an overweight weighting to Bitcoin against the index, we start selling down a little bit of Bitcoin to re-weight according to our portfolio weightings. Also, we look at monitoring those assets within the portfolio, and we look at rebalancing. Okay, now really important to review and rebalance constantly. We have to constantly follow up the fundamentals of each digital asset, their technology and their relative value, and we need to reassess again and again. There is a quote: know what's in your investment portfolio fundamentally, and I should say technology wise, and know why it's there. And obviously, if the fundamentals change or the technology changes within a digital asset, then we need to obviously sell it and get out of it. So it's an ongoing review process constantly when you have an investment portfolio, but also you need to monitor it and rebalance it according to the market. Anyway, I hope that helps, guys. Just a very quick one. This is the disclaimer, of course. This is educational purposes only. I don't take into account your financial position or your financial risk or anything like that. I have done thorough investment portfolios for people on an educational basis, and I've done some very thorough, 4-hour videos, and obviously it was paid content. But I hope this helps, and if you would like to get further information, please send me an email at esoterictradingsolutions@gmail.com. And I have got paid content that helps. But anyway, look, keep safe, look after yourselves, and I promise you I'm not going to say idiot anymore, because I get YouTubes from people and they don't, I'm not going to do that, I promise you. I hope you're well, and I'll talk to you very soon. Thank you.